Hey, what's up, guys? It's Jonathan here. Ever since the reopening back in March of 2021, we've seen used car prices rise by 34%. And in that same time frame, we've seen the price of new cars rise by 19%. But in recent months, we have noticed a divergence between the price growth of both new and used cars, which is very telling not only to inflation, but the overall trajectory of consumers and the economy. So let's talk about it. So back when we looked at the CPI report for October earlier this month, we noticed that new cars had risen by 0.4% month over month, whereas used cars actually fell in price by 2.4% month over month. And with the car section making up about 8.5% of CPI combined and 11% of core CPI, which is CPI minus food and electricity, food and energy. For most of the past 2 years, we've seen these prices move in the same direction. So we are starting to see kind of a divergence between the way the price movement of the two are going. So when it comes to used cars, back in 2021, we had low inventory due to the high demand of used vehicles. And this was mostly because, once everything reopened, people started going back to work. Demand for travel increased. A lot of people had a lot of savings, so they wanted to upgrade their vehicles. And there's a whole multitude of reasons why we saw such a high demand for used cars, and just really cars in general. Ever since used car prices reached this peak in January of 2022, it has fallen about 16% to today. And this shows that we are starting to see some demand destruction from working in class households with less money to spend on cars, because these are usually the demographics that will spend money on used cars. This could be due to a multitude of different things, but really the two main things is inflation that's requiring them to spend bigger chunks of their income on other necessities like food, energy, and so forth, and then the lack of credit options as well. Currently, right now, the average rate for used car is about 12%, which is much higher than what we saw back during the lows of 2020 and 2021. And obviously, this is because of the actions of the Federal Reserve hiking interest rate and tightening monetary policy. A lot of what we've seen has reflected in used car dealers as well. Currently, CarMax is down about 50% for the year, whereas Shift, which is a competitor to like Carvana, is down about 92%, and Carvana itself is down 97%. And a car shortage doesn't really help these kind of companies because they make a lot of their money based on the amount of volume of used cars they sell. So this is no surprise that we are seeing these companies suffer. And also, I mean, to be fair as well, some of these companies are just very poorly managed. When it comes to new cars, we're seeing the opposite. We're seeing the growth of new car prices continue to increase. And this shows us that wealthier households are opting to buy more expensive and nicer, newer cars. According to auto conglomerate Cox Automotive, for the past 18 months, almost all cars have been either pre-sold or sold within 7 days of delivery. We are still seeing very strong demand for new cars. The price of new cars is still moving up month over month, and it hasn't really slowed down the way used cars are. So, what can we take away from this? So, the number one takeaway we could get from this is that this becomes a little problematic for the Federal Reserve, mostly because it makes the picture for them a lot cloudier. Cars have been one of the biggest drivers of inflation ever since we've kind of noticed this has become an issue in 2021. And now, because we're seeing used cars start to lose value, but we're seeing new cars gain value, it's making things very blurry, and it may cause the Fed to accidentally over tighten. And I mean, even other economists are seeing this as well. JP Morgan believes that used car prices will fall 20% in 2023, whereas new cars will only fall 5% in 2023. It will be important for the Fed to be able to decipher what's going on here and really be able to tell, okay, well, the used cars are demand destruction is getting destroyed, but new cars aren't, which means that wealthier people still have a lot of money to spend. That brings me to another conclusion that we could pull from this, and I think this is a little bit more important, is that it shows that there's divergence, the same divergence that we saw with household debt, whereas poorer households are are straddled with more debt as a percentage of income compared to wealthier households in comparison to pre-COVID to now, which shows that again, wealthier families have more purchasing power and less wealthier families are starting to lose their purchasing power. And this made me think, okay, we need to start looking more at companies that actually have that actually cater to more wealthier families and companies that have more pricing power. So a good example of this would be a company like Tesla, because the average Tesla driver, I believe, makes about 140K a year. So definitely in the range of higher income. So this may be something you may want to consider with your investments for the next year or so, especially if we do get that recession that we have all been hearing about. For me, in my opinion, when it comes to buying a car, I don't think right now is the best time to do so. I think it would be much more beneficial if you were to weigh it out. And this isn't financial advice, this is just kind of my opinion. If you're to weigh it out another about 3 to 6 months, and where I think that the price for used cars will finally start to collapse. What we do hear from the automobile marketplace is that there's a lot of inventory that's being held back when it comes to the used car space. So I do expect to see more softness with used car prices. And honestly, in my opinion, I think almost everyone should be buying a used car. I don't really see the point of you buying a new car. Even if you buy a used car that's like a year old, like it's still better than buying a new one in terms of finances. But anyways, that is all I got for you guys today. Thank you so much for watching, and I'll see you in the next video. Peace.